Okay, guys, it's Coffee with Scruff. Let's have a chat about why you lose. And a warm welcome to one and all. First time here, I'm big fella Scruff, and I'm trying to put trading in the real world. And that's pretty difficult with the social media climate that's around at the moment. You know the one, I get the adverts all the time where it's just young kids in a Lamborghini going, "Oh, follow my signal system. I've got the biggest community in the world. It's free." No, it's not fucking free. There's never a free ride. And the other side of it is, do you really think you're going to learn something from watching a signal?
Fuck no!
Of course you won't. So we're going to kind of delve into it a little bit. Not so much picking on sort of the land of make-believe or what you call Instagram. Just really pick on yourself.
What?
Because if you're falling for these so-called signal services and one thing and another, and certainly if you see a sponsored ad that says, "Come to our free community," there is an income stream in there somewhere, and you will normally be paying it somewhere down the line.
Cheeky fuckers.
Because it's a very simple thing. It takes money to make money. So if they're spending money, and trust me, those ads cost a fortune. I used to run a mail order company, and we had sort of Google clicks and social media adverts all over the place. It cost a fortune. So there has to be a revenue stream to pay for it. All right. So don't ever get sucked into it. It's free. There's nothing wrong with charging for your services if you're good at it. But I think that's some of what they say is immoral. Certainly, I was watching a young kid the other day. We'll just call it frog trading, because he looked like a bloody frog. Anyway, this young kid there, and I mean young. "Oh yeah, you've been with me 6 weeks and you've made 30,000. What a load of bollocks.
How does that gobshite get on the television?
I'm pretty good at this. And no, let's just say no. Fucking stupid. And if you fall for it, I think you probably deserve it.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
Because nobody can be that stupid. But then again, the state of this world, we are. And that's another thing with this channel. Whatever's in my head comes out. There's never a script. It's just literally me, the coffee, the camera, and if I'm on the screen, the chart as well. I'm old. I'm 55 next month. And I've been around the block a long time. This is my 20th year trading. I started it in industry, had to do it for my job. So I didn't come into it from these adverts. I came into it from a professional point of view. And when I look at it, it really does make me cringe. Now, one of the things that I get is when you see me trade, you see a fraction of what I do. A fraction. You're only really seeing the last 5%. You haven't seen any of the homework, the setting up, or the dedication of learning the craft. And because people want the microwave culture, they expect it to be done now, instantly.
Who'd be stupid enough to do that?
Justify, stupid.
They kind of lose sight on this is a job, and it's a professional job. So the case in point, most people go, "Oh, I need to know where your stop is." Why? I need to know where it is. You don't.
Out of the frying pan.
And into the fire.
Because that's my tolerance. It's my pain point. And there's only one person will know that. And it's me. Because there's an old saying. It's my favorite quote. Know thyself. It is the beginning of wisdom. Now, I have a high tolerance for pain. I genuinely do. So I can ride it out a bit. But that comes through experience, but also because prior to having my own business, I worked in the blue chip sector. I dealt with big contracts. I was used to big money numbers. When I ran my own business, I had lots of employees. It was a high turnover business. And that's how I started trading, funny enough. I was just sanitized to the numbers. So my pain tolerance is high. okay? Whereas a new trader will automatically have a tight stop because that's what they're told to do. And they end up getting death by 1,000 cuts. And because it's death by 1,000 cuts and they're getting clipped and clipped and clipped over and over, they then believe the guff from the advert of, oh, you only need to win 4 times out of 10 and you'll be profitable if you have your RR right.
They've done studies, 60% of the time it works every time.
That doesn't make sense.
No, it's absolute bollocks. What they're really telling you is, just keep with me, you'll be all right, you'll be all right. You're shit at your job, but you're still going to get paid. Well, the key element there is you're shit at the job. If you're getting clipped out over and over again, you ain't reading the markets at all. Now, the markets are living, breathing things, which is why backtesting doesn't fully work. Backtesting will show you a system is viable, but it won't tell you if it's profitable because it's always a perfect scenario. Yes, I would get in here and I would get out at the top, but you wouldn't in real time. So what you have to do is forward test. Now, the question is, how many have you done it? And what you need is around 100 trades to get a basic core sample. And actually, you need a hell of a lot more than that. And another way of doing it is discipline and patience, which is done through a 30-day challenge. And a 30-day challenge is you're only allowed to take 1 trade per day for 30 days. So it teaches you to get the golden shot. But most people can't do that. They'll take 1 trade on one account and then they'll start looking at something else. So you haven't really learned anything. So if you haven't got discipline and patience, and 30 days is a short period of time for a lifetime, you're pretty much screwed. Now, the next part of it is, how many data samples do you look at to get the sentiment of the market? People might read the news. Well, what difference does that make? It's normally priced into the charts anyway, because do you really think what's happening is going to affect the next hour? Of course it's not. It's built in for months.
Are you sure?
So you can't take that as gospel either if you're day trading. The chart will tell you everything you need to know. So they'll look at, maybe it's a 15-minute chart, an hour at a push. And they'll go, oh, well, the price is under the 200 moving average. Well, what does that mean? It doesn't mean anything on those time frames. It's only 215-minute candles. On the grand scheme of things where the big money comes from, that's a blink, nothing. So you get what's called whipsaw. So you're getting cut to pieces over and over because you're only looking at maybe 1 or 2 data samples. So you look at underneath a moving average or stochastics oversold, overbought, whatever. Where you go? Oh, I'm clipped out. Because you've got the sentiment wrong. Don't understand what's going on with the chart. Personally, to give you an idea of how many data samples I look at, before I've even considered placing a trade, I've spent a good hour, hour and a half understanding the markets. From there, I do read the news. I need to know when the spikes are coming. Not what the news is. Couldn't give a toss about that. I just want to know what time it's coming. So I've got that. But then when I decide that I've picked my product and I'm going to chart, how many data samples do you think? I told you might look at 2 or 3. Might even look at 3 or 4. Well, I look at 3 baskets. Each basket is composite of 3 time frames. It has 3 assets in it. It also has a checkpoint in it as well. Okay. Now, that's just 3 assets. But I look at multiple things, or I should say that is 3 baskets rather than assets. And I do it for a single asset. Now, inside of those baskets with all of the data samples that's in, there is approximately 25 data points that I check. 25. That's just to get a sentiment. Then I'll drop it down into, say, a monitoring chart. And I'll be checking it against levels and fibs and extensions. So that's another 3 data samples that I'm looking at. Then when I decide that I'm actually going to go to market itself, I'm then looking at a candle count back. And it's what the current candle sentiment is, where the sentiment came from, and the last rolling 15 minutes. So I can see what a fractal or a range is. So when I actually go to press the button, I have got multiple data points that tells me what's going to happen. Then I've got the targeting system to work the targets out. Now this also works out what my expectation is as a profit. It also works out what my expectation is if I'm wrong.
You're taller than I imagined.
I'm bigger in every department.
Now that comes from ATRs, and it's broken down into 3 points and broken down into 3 points again. So again, it's multi data points. And this is before I've even pressed the button. See, what you see when I'm trading, and people always go, well, how do you do this? How do you do that? It's very difficult to explain. But I show the guys in the squad all the time, because on a Monday night, we'll break a chart down and I'll do a prediction on it. And you can count in one hand the amount of times I've got it wrong. And this isn't over a couple of months, this is over years. One hand. Right? And you ask them, they will tell you.
No way!
It takes a good 40 minutes to break a chart down and have a look at it. And then press the button. And then when you see the clowns on Instagram and things like that, where they just switch your phone on and they start going like this on the phone, there's not a hope in hell they could see what's going on with the chart. So when you look at why you lose, it's probably because you're not doing it as a job. You're basically taking a punt. And then you're death by 1,000 cuts because your stops are too tight.
Jump out the closet, chop your little head off.
The game, like I've said many times, all it tells you is you're shit at your job. Because the stop has one job. One. Protect the account. That's it. That's all the stop does. Has got nothing to do with your trade. Zero. All it means is if you're wrong, that's where you get out and how much it's going to cost you. Now, if you enter into the market and it runs straight at your stop, you should be at peace. Because you should have also asked the question, can I afford it? Well, if you can afford it, it's not a problem. There's another question you need to ask as well, because if it's going to hit the stop, it also needs to go and hit a profit target. And you need to ask a question about that. Is it worth it? I work roughly on a 1-on-1 ratio. Now, it's done in a strange way. It's done in a DCA, dollar cost averaging point of view, but it is worked out at roughly 1-on-1. And all I have to do is keep my win rate high. But because I've just told you that I use multiple data points, I've normally got the button pressed. Now, if you look at the video that I did with the Vanguard last night, I pulled the statement up and I went right through it from the start. Yes, there's red marks, but they're very small. And they're not that many. Why? Because I do my homework. But the next part of it is, you might have a good hit rate. You might have built your account up. But you don't leave your money in the broker. You get it out. And that's what my Vanguard is. My Vanguard is all built from trading profits. All of it. You know. And you've seen it. It's pretty sizable. You build it up. You take money out of your broker. And you put it in savings. Spend it. Take your missus to the dinner or theatre, whatever you want, but use the money for something that's enjoyable. But if you leave it in the broker, I'll tell you exactly what will happen, and I've seen it happen so many times. Billy Big Bollocks will start coming in. You'll up your position size. You'll keep your stops tight, so you'll get death by 1,000 cuts, or you'll do something even worse. You'll not put a stop in at all, or move the stop, and you'll keep going at it. And you'll blow the account out because you thought you were clever. I trade very small in relation to the size of the account, and I get the money out. So it takes time to build up, but I'm always paid, and that's the end of it. And that's what having a job is. You do your tasks, and at the end of the week, you get paid. Maybe I'm wrong. Maybe I'm wrong. But check the other video out. You'll see it. And if you go through the Vanguard series, you'll see how I take the money out. I set it to a baseline every month. At the minute, I'm working on bringing the leverage down from 500. I want to get it down to about 100. So each month at the end, I shut the account down. I open up a new one with a lower leverage on it. And that, again, stops you blowing your account. So drop in the comments and tell me, how many data points do you look at? I'd be interested. But it's like most things. If you don't put the work in, you're not going to get anything out. And there is nothing free in this world.
I'd buy that for $1.
So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.